Right then, so now you know a little bit about candlesticks if you watched the previous video. Let's talk about the market and the trend of the market. There's a saying that the trend is your friend. So, let's make friends with these trends, shall we? How are we going to do that? First, we need to identify who your friends are. So let's head into the market. Right, blank screen. Right, let's get on with this. So, markets, right? They move up, they move down, they can sometimes move sideways. Now, when markets move up, down, or sideways, it's not a straight line, as I drew. When it goes up, it comes down, comes up, goes down, up, down, like this. Well, if it was slightly more accurate, it'd probably be like something like that. That is what the market really looks like, more accurately. But I think you can tell that market here is trending upwards. Well, how can you tell? Well, first of all, you can see that the price point here is lower than the price point here. So the market did move up. We know that for a fact. But how? What are the features that we can identify that prove that the market's moving up? Well, in simpler terms, when the market's moving up, it's usually in steps and stages. So usually you'll have the market rally, the market will have a correction, and then the market will rally again. You get a small correction, rally, small correction, rally, right? So that is essentially a uptrend. Market goes up, market comes down, market goes up, market comes down, market goes up, market comes down. Now, how can we identify it's an uptrend? By these things here. And this. What is it, you may say? Well, that is a higher high. Well, actually, we'll just call this one a high. And then we'll call this one a low. So we have a high and a market low. So that's a high and that's a low. Essentially, that is the market, identified using highs and lows. Now, what this low is a higher low, and this is a higher high. Bang. Now that's how you can identify uptrends. Because in a period of uptrend, price is breaking the high and creating a higher high. So this high is higher than this high, that's why it's higher. Get it? Self-explanatory. This is a higher low because this low right here is higher than this low. And in uptrends, markets tend to break highs. So that's a high, market pushes past it. That's another high, market pushes past it. Another high, pushes past it. Uptrend. Downtrend is, well, think if I just do this, that is a downtrend. I just inverted this. So we got, well, that's a high, that's a low, but it's kind of backwards. So we'll redraw it. So this is what a downtrend looks like. Exact same thing, except if I write the texts, you get the highs, and then you get the lows, and then what would this be called? A lower high. So in periods of downtrends, prices are creating lower highs and lower lows. And price likes to break lows in periods of downtrend. So here's a low, breaks through. Here's a low, breaks through. And in periods of downtrend, prices doesn't break the highs. Here's a high, price has not broken the high. Instead, price breaks lows. Price breaks lows. In downtrends, price breaks highs. In uptrends. So that is essentially the basic characteristics of uptrends. And in consolidation, price just moves to the side, like this. Not really breaking highs or lows. And it's staying within a range. Now that, in essence, is how you can identify. So if price is looking like this, breaking higher highs. Price looking like this, breaking lower lows. That's bearish and that's bullish. And this is consolidation right here. So if we go to the charts, let's identify them in real life, shall we? So you can see this is a low, right? Price then, you can see, rallies up. And then what does it do? Creates a high right here. And we can just delete that. So price, first of all, rallies up, creates a higher, creates a high, comes down, creates a low, and it's not quite a low until price breaks the high. And then bang, breaks again. Now you see this is definitely higher than that. And then one more time, here's a low. Price comes low, and then price then, because it's bullish, breaks higher. And then, well, you guessed it, you create a higher low, because this low is higher than this low. And because it's bullish, price then breaks the highs, because that's what price likes to do. Break the highs, and bam, you've just got a period of an upward trending market. For 8 days, it was trending upwards. You can tell, well, it continues to trend. That is, well, quite simply how you identify higher highs and higher lows. Now this is a, well, this is a 4-hour time frame. So if you go to the weekly, you can see that the candlestick is bullish because the candlestick is representing the entire week, and that 4 hours within the week. So yeah, that's another way. You can just look at the candle. You can look at higher time frame candle, is it bullish or bearish? So yeah, the weekly is a bullish candle because at the start of the week it started lower than where it closed, and within the structure you can see price creating higher highs and higher lows. But you can see, it's not as pretty, it's not as straight as I drew it. As you can see, it goes up, comes down, comes up, only just a bit higher, kind of like messes around a bit and it goes a bit lower again before it breaks. But yeah, that is the market for you, really. That's how it operates. It just does its own thing. But yeah, so far, that is that. So, yeah, that's all you really have to remember. So, in periods of uptrend, you want to buy. In periods of downtrend, you want to sell. And in consolidation, well, you don't really want to mess with it. Or you just buy at the lows and sell at the highs, you know. Anyway, that's the basics. And I hope you learned something. So, yeah, peace.